The next learning objective is to classify costs for service, merchandising, and manufacturing companies. So let's further break down the classification of all costs. It's very important to understand how costs are classified for the rest of this class, so make sure you have a good grasp of these concepts. After going over the classification, we'll get some practice classifying costs. Costs are either product costs or not product costs. As mentioned before, product costs are all costs associated with either obtaining merchandise products or building your own product. For a guitar manufacturer, it includes the wood, strings, and glue to build a guitar, as well as paying the people who actually build the guitars, the supervisor who oversees the building of the guitars in the factory janitor, and the bills associated with the factory such as factory utilities, factory equipment depreciation expense, and factory rent expense. Costs that are not associated with a product are simply called period costs and are expensed in the period in which they are incurred. For a guitar manufacturer, that would include the accountant's salary, the salespeople's salaries, the store utility bill, depreciation expense on the store's equipment, such as the display cases, etc. A cost is often traced to a cost object, which is anything for which managers want a separate measurement of cost. For example, a product, department, sales territory, or activity. In our examples, the cost object is the guitar for the guitar manufacturer, or batches of lemonade for Linda Lou's lemonade stand. But costs could also be traced to different departments, different sales territories, or even different activities. Now let's talk further about product costs. All product costs are either a direct cost or an indirect cost. Direct costs are costs easily and cost-effectively traced to a cost object, like the guitar. Indirect costs cannot be easily and cost-effectively traced to a cost object. Direct costs are further broken down into direct materials and direct labor. Direct materials are materials that become a physical part of a finished product and whose costs are easily traced to the finished product. For manufacturing a car, that would include tires, seats, the car's frame, engine, brakes, battery, etc. Direct labor is the labor cost of employees who convert raw materials into finished goods. For a car manufacturer, these are the assembly workers, and the costs associated with them are their wages and salaries. Manufacturing overhead are all product costs except direct materials and direct labor. They cannot be easily and cost-effectively traced to a cost object, such as the guitar for the guitar manufacturer or the car for the automobile manufacturer. These are all costs associated with making the car, but cannot be tied directly to one car or another. Examples include factory rent, factory depreciation, factory maintenance, factory utilities. These are all manufacturing overhead because we cannot easily and cost-effectively trace their costs to each car produced. For example, we can't tell how much of the factory's electric bill went into building one car over another car. An important thing to know about manufacturing overhead is that later, we'll take all these overhead costs and allocate, or divide them up, amongst all the cars we produce to help us find the true cost of each car. Usually, the longer it takes to make a car, the more overhead costs it gets allocated to it. Manufacturing overhead are sometimes broken down into two more specific categories: indirect materials and indirect labor. Indirect materials are raw materials used in production that are difficult or not cost-effective to trace to a particular product. Examples of this include glue. Believe it or not, in the 1960s, cars had windshields glued to their frames. It's not cost-effective to measure how many drops of glue we used for each car. Another example are the tools used to make the cars. A small hand tool like a wrench would be used to help many cars, so it's an indirect material. Another category of manufacturing overhead is indirect labor. Indirect labor is the cost of labor in the factory for people not directly producing the product. One example is the factory janitor. His wages are part of the cost of producing the car since he's a janitor for the factory, but he doesn't directly produce the product, so his wages are part of manufacturing overhead, specifically indirect labor. Another example of indirect labor is the factory supervisor. The cost of his paycheck is part of manufacturing overhead, specifically indirect labor. So once again, a reminder about manufacturing overhead. Later, we'll take all these overhead costs and allocate or divide them up amongst all the cars we produced to help find the true cost of each car. Usually, the longer it takes to make a car, the more overhead costs it gets allocated to it. So it's making that car more expensive. So the final cost of each car will include the direct materials used to make it, the cost of the labor who worked directly on the car, and then the car will get a portion of the total manufacturing overhead costs. So let's get practice classifying these product costs of a guitar manufacturer. They are all product costs, but are they direct or indirect? And more specifically, are they direct materials, direct labor, or more manufacturing overhead like indirect materials and indirect labor? Let's start with the cost of the wood. Can the cost of the wood be easily and cost-effectively traced to a certain guitar? Yes, this would be a direct cost and would further be classified as a direct material. How about the cost of the guitar strings? Can they be easily and cost-effectively traced to a certain guitar? Yes, we know what kind of strings were used for each guitar. This would be a direct cost and would further be classified as a direct material. How about the cost of the glue? Do we know exactly how many drops of glue and the exact cost of glue it took to make each guitar? No, there is no cost-effective way to measure the amount of glue used for each guitar. Even if we could, the cost difference would be immaterial. So the cost of the glue is considered an indirect cost called manufacturing overhead, costs that cannot be directly tied to the product. We could further classify it as indirect materials, which is a subcategory of manufacturing overhead. Now, how about the wages, the cost, of the people making the guitar? Can those wages be easily and cost-effectively traced to a certain guitar? Yes, we know which workers worked on which guitars and for how long, so we can trace the cost of their wages to each guitar. This would further be broken down and classified as direct labor. How about the wages of the factory supervisor? The supervisor supervises the production of many different products, so his cost, his paycheck, is an indirect cost called manufacturing overhead. We could further classify it as indirect labor, which is a subcategory of manufacturing overhead. And how about the cost of the factory janitor? His paycheck went to cleaning the factory where numerous products were made, so his paycheck costs cannot directly be contributed to one guitar or another. How about the factory utility bills? Factory utility bills cannot be traced to one guitar or another, so it is manufacturing overhead. The same is true of factory rent, factory depreciation, factory maintenance expense, etc. In a future chapter, we'll find out how we take all the manufacturing overhead costs and allocate or divide them up to the individual guitars. This is often based on how long it took to make a specific guitar. If a guitar is complicated and it takes a lot longer to make, then it will probably get a bigger portion of the overhead cost allocated to it, making the cost of the guitar increase. So let's quiz ourselves on classifying more costs for TED's tablets. TED's Tablets manufactures tablet computers. So how would we classify depreciation of factory equipment? Would it be a period cost or a product cost? Since the factory is where the tablets are made, it's a product cost. Then, would it be a direct cost or the indirect cost called manufacturing overhead? Well, depreciation on factory equipment cannot be easily traced to one particular tablet, so it's considered manufacturing overhead and will later be divided amongst all the tablets so that each tablet gets a portion of the overhead costs added to the cost of the tablet. Now, if we just change one word and it was instead depreciation on office equipment, then things change. The office equipment, like a copier, does not help manufacture tablets, so this cost is simply a period cost, which means it's expensed in the year that the depreciation occurred. Now, how about wages for the assembly line workers? Because these workers actually convert raw materials into the finished goods, these costs are obviously a product cost and would be further classified as direct labor. Their timesheets would show which batches of tablets they worked on, so the cost of their wages can be easily traced to certain tablets. Now, how about the cost of batteries, processors, and other materials used to make the tablets? These are obviously product costs that are directly and easily traced to each tablet. So they are a direct cost called direct materials. How about advertising? How do we classify that cost of advertising? Advertising helps sell products. It doesn't help us build the product, so this is a period cost. How about property taxes on the office? The office is not where the tablets are made, so this is a period cost. But if we change one word and it becomes property taxes on the factory, this changes things substantially. It's classified as a product cost called manufacturing overhead. And how about the CEO's salary? He or she does not normally work in the factory, so this would be a period cost. How about insurance on the factory? Insurance on the factory is classified as a product cost called manufacturing overhead. What about insurance on the office? This would be a period cost. And how about the production supervisor's salary? He or she is in charge of overseeing the production, so this is obviously a product cost. But this person's salary cannot be traced to a particular tablet or batch of tablets, so this is a manufacturing overhead cost, further classified as indirect labor. Another example of indirect labor would be the factory janitor's salary. How about manufacturing supplies? These are supplies used in the factory but not actually put in the tablets. These could be rags and cleaning liquids used to clean areas of the factory. Since they are part of the cost of producing the tablets, they are a product cost. But because they cannot be directly and easily traced to a certain tablet or a batch of tablets, it's considered a manufacturing overhead cost called indirect materials. How about freight costs on purchases of materials? For example, we order some processors to be put in the tablets, and there is a freight or shipping charge. How do we classify this? This just increases the cost of the processors, and processors are a direct material, so this cost is considered part of direct materials. And finally, we have delivery expense. This is the cost of delivering our tablets to our customers. This has nothing to do with making the product. This is all about selling the product. So this is a period cost, specifically a selling expense. Sometimes you'll see these abbreviations. If you see DM, that means direct materials. If you see DL, that means direct labor. And if you see MOH, that means manufacturing overhead. Here is a cool summary of several of the costs we classify. This is a good study tool to use. Notice all costs are either product costs or they are expensed during the period in which they occur, otherwise known as a period cost. Notice that the period costs are also known as selling and administrative costs. Now, if we bring in the income statement and balance sheet of a manufacturer, you can see that the period costs, selling and admin, show up on this line of the income statement. On the other hand, the product costs will appear in one of two locations. Before the product is sold, they will be found on the balance sheet in the current asset section. They will be either in raw materials inventory, work in process inventory, or finished goods inventory, depending on if the product is still in the raw material stage, is being built, or is a finished and unsold product. Then, once the product is sold, the cost is transferred from finished goods inventory to cost of goods sold on the income statement. Depending on if a manufacturing company is labor intensive, which means people do most of the work, or machine intensive, where machines or robots do most of the work, a manufacturing company may combine two categories of costs. Prime costs are simply direct materials plus direct labor. Conversion costs are simply direct labor plus manufacturing overhead. You can see in the diagram that direct labor is included in both. So why do we even care about this? Well, the prime costs are the primary costs in a labor-intensive manufacturing process where workers are doing most of the assembly work. Examples are Linda Lou's lemonade stand or the custom guitar shop. The main costs are direct materials and direct labor. A labor-intensive manufacturing company would be wise to concentrate on these costs. Meanwhile, conversion costs are the primary costs in the machine-intensive manufacturing process. It's mostly robots and automation that do the assembly work. An example would be Coca-Cola that has expensive machinery making and filling cans of soda. Coca-Cola would be wise to focus on minimizing the conversion costs. In later chapters, we'll be using the conversion cost concept quite a bit.